Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, June 23rd, 2022. It was, again, an interesting market today. Not always the fastest market. In fact, it had periods of extreme slow, but there were certain periods, particularly into the close, where it was a total absence of sellers. There just were no sellers. The buyers would come in, they'd stop. It'd look both ways. Nobody was coming. They bought more. And that's pretty much what it did all the way into the bell. And then we found sellers. So interesting. And I want to include the following. And this is my my insight, my feeling on the market. It has nothing to do with being bullish or bearish. I don't believe that there's a narrative that's really being held firm by a large firm, a large trading firm, a large firm that is suddenly gone bullish. I don't believe that's the way they trade. They're trading algorithmically, they're trading technically, they're trading for premium, they're trading quantitatively. And that does change the atmosphere a little bit, because the outside of all of that, the reality is that, yeah, we are experiencing high inflation. That isn't going away. It doesn't appear that it's ready to even start to slow down yet. And so the markets are on the right track on the larger scale in terms of, I do believe we are still within a correction, a larger correction that'll take more time. So I believe that within all of that, we are in a fourth wave correction within a fifth wave down. So in other words, just to do degrees, we are in an intermediate degree C wave down. That's my preferred count right now, my preferred view, but I have alternate views that I also could say are preferred. So I run them side by side. The one that is on the chart right now is that we are doing an ABC of intermediate degree down, and that is to put in the first primary A wave. So a primary A wave. Still working on the cycle A, et cetera, as we go through this very longer term correction. So C wave down. The alternate, which runs congruent, is that it's an intermediate 1, intermediate 2, and we're in an intermediate third wave down, which would tend to lend itself to be that this fifth wave coming can be a doozy, can be a good old punch in the jaw, because people are just not expecting it. We've been lulled into complacency. The market's not going to go down right now. And then suddenly it's like, boom, it's there and you're gone. So that's the daily chart. I still believe we're in that C wave down. I still think we're in that. We're in the minor fifth wave of the C to complete the C. And that's what's happening now. And within that, we are in the minute completing stages of the minute 4, which will lead us to the minute 5 to finish the minor 5, to finish the C, the intermediate C. And if necessary, the primary A wave. More on that later. Let's talk tomorrow. What I do think all of this is about, an expiration, and that expiration is tomorrow. Now, I was led to believe, and I do believe it was pretty big, last Friday, the June, the quarterly, the monthly, the quadruple expiration was said to have been $3.6 trillion. That's how much settled. Now, I'm looking at what's going on and I'm thinking, there hasn't been enough people out there, or a larger firm or several larger firms, that still aren't out of their, for what I can tell from price action, they're longs. They're still looking to dump a lot of stock, a lot of underlying, a lot of something. They're still looking to sell, but they're not willing to do it at 11,000. So they're getting it up to where they want it to be just by trading, but it's all in a corrective mode. Now, so tomorrow is an expiration. Now, and I also think that it's focused So and what I mean by that is in the NASDAQ, there are 100 stocks. Each should participate equally, but they don't. There are heavily weighted stocks. You already know, if you've come and you listen to what I talk about, that Apple carries the heaviest weighting, not only in the NASDAQ, but also in the S&P. So that's two major indexes that the S&P has, that the Apple computer has control over. So if Apple really wants to get going, you're going to take an index with you. You're going to take two indexes with you. I don't know how many ETFs you're going to take with you, et cetera, et cetera, et cetera. So Apple has been trying to determine what level it is going to expire at. And it's been bouncing around 136, 37, 38, as high as 140. I'm trying to take a peek to determine if 140 is basically going to be the acceptable level, or is it going to get pushed even higher? And I don't know. But right now, there seems to be volume that's trading at 140. So I would have to say it's somewhat of a value area. But they have to get through 38, 39. But that has not been too difficult thus far. So Apple is just below or close at 138. So 2 more points tomorrow should not be a hassle. What that does to the NASDAQ and the S&P, again, that's where the picture comes back together. Because as we saw today, Apple and Google were higher. Microsoft was higher substantially. So when you go and you look, again, just quickly, I know this takes too long, but I'm sorry. First of all, S&P, Apple, Microsoft, Amazon, Google, Tesla, top 6 out of 500, the top 6. And they carried a lot of weight in terms of what percentage they were responsible for, what percentage of the change being up 35, 84 were they responsible for. Apple, all by itself, was 1 7/8%, almost 2% of that whole gain. Wow, right? Coming down to Google, which has Class A and Class C, which are doing a split, and put them together, and you had an additional 0.5%, over almost 5/8%, and so on and so forth. This has a big effect. You can go to the NASDAQ. You're going to find the same thing. This, look, Apple, here we had one, Microsoft, Amazon. Combined, that's 3, 5, 7% of 170 points is courtesy of 3 components: Apple, Microsoft, Amazon. Boom. And some of that was countered by Tesla being down. That's what it's about. It's not bullish. It's not bearish. It's about price. It's about where an expiration can happen, where money can change hands, where the sellers will be satisfied and the buyers are okay, and everybody settles out right there. That's what it's going to be about for tomorrow. How they get to that level is not going to depend on whether the NASDAQ's at 11,700 or not. What we can attempt to do is to wrap some parameters around it. And right now, the ones I have to use are the fibs, the straight fibs, but I'm going to be looking at the Fibonacci for upside. And so I want to go to retracements, right? And I'm going to look at just straight retracements. And they suggest that we're reaching and have reached, got to, failed, fell below, but we reached a 0.382 level. And that as was 11,742. 11,775 is my next area, which is where the previous 4th kind of got up to. 11,775. A break there opens the door for 11,950. That would have to be quite the push, but Can from here, is it possible for the NASDAQ to go up 250 points? Yes, absolutely. 3 or 4 stocks. Trust me, they push hard enough, that's where it'll be. And it isn't a matter of the world turning bullish. It's all about those stocks, their expiration, and their pricing. So let's follow the price action. So for tomorrow, I do think that we need to continue because it's expiration and it could come in all. Tell you, isn't it a pain? Let's try that again. For tomorrow, we have to continue to leave open the potential that the market will get up at least to 11,775. We were close to that. We got up to 66. Maybe that was enough. But again, from here, this does not look like a 5. Working on it, maybe, but it's not necessarily a 5. This is a bizarre little number that's going on here. But I can do one more, and that's going to be extensions, and those extensions are going to go from that low. No. There we go, right? Try that again. Come on. Hand drawing. Thank you. Come on. Let me do it. That one. And we'll take it up to this high, top of A, down to the bottom of B. It's kind of not perfect, but good enough. So here we have the fib extensions for wave C. If this is A, this is B, we're looking for a C wave. C would be equal to wave A at 11,930. C would be 50% retracement at 11,950. That's a zone. That's a realistic zone. That's a zone that may come into play. Before that, we've already broken above the 382% and got close to that 11,774. So we still have that there. That breaks, we have 11,800. That's what I'm going to call it. And then a break there, we got a little bit of some room. It could fly, and it could look like this. It's just going to be a dash. They're just going to go and then grab, but it's not necessarily that they're coming for the NASDAQ. The NASDAQ has to move because it's calculated in every tick of all of the components. So it recalculates and spits it out. It has to go. It has to move. So that's why we get to trade. Those are upside. Downside, it's the same story. So basically on both sides, it's the same story. We're following price action, but here's what we're continuing to allow for, because that price action and the charts are leaving that open. There's nothing conclusive as to a top being in and the next cycle down beginning. That's not there yet. Still expecting it, but isn't happening yet. Now, if we start to come down, same deal, folks. But right now we have the moving averages pretty much lining up to go up. What's the last leg? The 50 needs to get above the 200. If that happens, we should end up here because it's just going to be pulling in buyers. And again, remember, at expiration, we move through strike prices to either side, and it forces a lot of adjustments because there's a lot of positions that are wrapped around that number. Move it too far away, one side's not going to get exercised, the other side's not getting assigned. It presents adjustments. All right. Downside, it needs to break all the moving averages all the way down, including the 200, the hourly 200, the hourly 50. The 200 is at 11,617. The 50 is at 11,576. They need to be broken and not looking back. That's going to be our clue. Then finally, if it comes down and breaks 11,320, 319, then I'm going to be more convinced we're into that 5. This is done. Now, it had done this, and when it did that, I thought, okay, this is in, this is done, we're heading lower. And it did. It stopped. and it went up, and has not once, but twice broke to a new high for the sequence. So again, leave open possibilities, follow the price action, use your moving averages. No matter what's going on, use the moving averages. They really are helpful. They aren't biased. They don't care. They're just following the price. Have a great expiration. And our next update will be on Sunday, June 25th.